Hi, I'm Jared Nelson from the Investing Channel, and welcome to The Juice. The wait is over. President Biden has picked Jerome Powell to lead the Federal Reserve ahead of the February 2022 deadline. Powell was nominated by former President Trump in 2017 to serve the 2018 to 2022 term. And before joining the Fed, Powell was a partner at the private investment firm the Carlyle Group. He also served as Assistant and Undersecretary of the Treasury during former President H.W. Bush's administration. So who else was in the running? Well, speculation ramped up in recent weeks that President Biden might go for Fed Governor Lael Brainard, a veteran of the Clinton and Obama administrations, and was seen as more progressive and a champion to fight financial risks at banks and climate change, and is also the only Democrat on the Fed board. But until recently, Powell was expected to be a shoo-in. However, several ethical scandals which led to high-profile resignations took place and threw his position into question. It turns out some Fed members were engaged in trading stocks at the same time they were implementing policies aimed at boosting markets. So where do we go from here? The Fed finds itself in a position it hasn't seen since the 1970s. High demand and low supply driving inflation. Recently, the FOMC announced it would taper its bond buying program over the next several months, and markets have now priced in 2 rate hikes next year, starting in June. Investors fear that stocks largely driven by low interest rates will falter even as the economy struggles to recover from COVID. This situation is eerily similar to the late 70s, when OPEC restrictions on oil drove energy prices through the roof. The FOMC jacked up interest rates past 15% to cut off demand and tame inflation. It worked, but it also drove the U.S. economy into a recession, albeit briefly. The bottom line is this: markets like certainty. Keeping Powell as the head of the Fed sends a signal that current plans aren't changing. So, we can expect the taper program to wind down on cue, with higher rates likely in the middle of next year. That's all we have time for today on The Juice. Click, follow, and subscribe to The Juice email for your daily dose of market minerals.